It's crazy. And why would they keep rates so low and keep printing money if everything is fine with the economy, right? That's what the stock market is telling us. No, it's a big bubble. Tuesday, July 13th, 2021, Monaco 64, home of alternative economics and contrarian views. We're going to look at how the dollar is continuing to collapse. Yes, the major stock market indices in the US have made an all-time high. And despite that, the Federal Reserve, all other central banks are keeping rates at zero or even negative, are continuing to print money. The stock market is supposed to be an indicator of economic strength. So how come we have a huge bubble in the NASDAQ, S&P, and Dow? It doesn't make sense. To me, it shows that the dollar is going down the drain. It's going the way of the dodo bird. It's going to be extinct. Yes, it might be around as a dollar or a digital dollar or whatever you want to call it, but its purchasing power is becoming more and more minimal. And yes, it might sound counterintuitive to say that the dollar is collapsing while the Dow and other indices are really forging ahead like a freight train. But if you look back during the Weimar hyperinflation, the stock market did very well as well. In Brazil as well, I remember well in the 80s and early 90s, the stock market did really well. There was a lot of speculation in the financial markets, in the money markets as well in Brazil. Venezuela as well. We've seen the stock market there do really well. Have a stellar year once, I think, during a very high inflation or just before their hyperinflation. Zimbabwe stock market has done well as well. So yes, lumber has come down, but I think as the Cantillon effect says, the money and the inflation flows through different places at different times. Yes, it's gone through lumber first. I think it could go back into lumber. It could go into anything else. And today I'm going to quickly show you a few charts to give you a visual idea of what's going on, a long-term visual idea. And I'm not telling people here to get out of the stock market or to get into gold or to get into commodities or anything. But just to show you how careful I think you need to be. Who knows? The stock market could continue to go higher. We could see the Dow at 50,000 before the end of the year. We could see, I don't know, the NASDAQ at 20,000, the S&P at 5,500. But will it mean anything? Who knows? Will you still be able to buy things for what you can today with a dollar? I don't think so. And as we saw yesterday, the Federal Reserve is going to continue to keep buying assets, which is QE. They're going to keep rates low for at least the end or towards the end of next year. They're talking about maybe raising rates next year, maybe by 0.25%, which still isn't that much. But we've seen in the past as well, when they try to normalize policy, how everything ended in tears. And now with the financial markets, real estate, everything's so leveraged, I think it's going to be even more dangerous for them to do that. So let's quickly look at the charts. That I was looking at this yesterday because I saw that the stock markets traded up to new all-time highs. And I've done a monthly chart so you can have a better idea. People talk about Bitcoin being a bubble, but look at the NASDAQ here. And this is going back, let's see, to the mid-90s. So we had that little pop back in 2000. Well, that was the dot-com bubble. Does it look? It doesn't even look like a bubble now. So it, but it was a bubble. So you tell me if this isn't a bubble, yeah, and it can keep going up for a lot longer. And you can see the times here prior to 2020 when the market crashed, had a big correction. That's when the Fed was trying to normalize, and then they quickly realized that they couldn't, and they reversed everything, of course. So now, I mean, they've really crossed the Rubicon. So yeah, jump on the bandwagon, but be aware, this is a bubble. So let's look at the Dow. It's the same kind of story. It's not as big a bubble, of course, as the NASDAQ. Now the S&P as well. Why would they keep rates so low and keep printing money if everything is fine with the economy, right? That's what the stock market is telling us. No, it's a big bubble. So now let's have a look at tangible goods as represented by the CRB index, hard assets, commodities. We are told, of course, I've seen headlines recently that the inflation is transitory, that commodities are overbought. They've had a huge run. Yeah, just look at this chart of the CRB and tell me which one do you think is a bubble compared to the ones I just showed you. I would say the old saying about a picture being worth 1,000 words is there. I mean, so as I said, I think people need to be careful, and I think the Federal Reserve is trapped. If they try to normalize, it's going to be even worse now than it was prior to 2019 when they were actually trying to do it. And why do I say that? Well, because they've built an even bigger bubble, and then they're continuing to do so according to the Federal Reserve itself. So what's the end game? Well, I don't think they have an end game. They just want to keep you in this boiling water for as long as possible, and hope that you don't realize that you're going to boil to death. And boiling to death is when the dollar really loses most of its value, I would say. They think they can keep this going forever, and that people are going to have faith and confidence in this game. So I choose not to play the game. I choose to look from the outside. The only exposure I have are some mining stocks. Yes, they're not doing well, but I'm holding the line there, and I have my physical gold and silver. And I think people will need a lot more than just investments and gold and silver when the collapse comes of the currencies. And we will be covering that aspect of things later on this week when I speak to Star Path Academy about his experiences during the Romanian hyperinflation back in the 1990s. So now let's look at where the markets are this morning. It's just before 8 a.m. London time. We've got spot gold up about $5. It's at 1811. The range has been 1805 to 1813. Key resistance here, of course, is 1818. I think it was the high the other day. So precious metals, having a tough time. They have had for the last few weeks. I think some of it could be manipulation, but the other one as well is that people are so exuberant about the stock market. That's where they want to be. That's where the money is flowing right now. But that's fine with me, as I've said before. Gold and silver are really insurance, and they're money, really. They're not an investment. If you want to invest, go into the stock market or go into the mining stocks or invest in yourself. That's the other thing as well. Invest in yourself, invest in your family, maybe some friends, they need some help. They have their own idea of a small business. Who knows? It doesn't have to be just the stock market. Yes, they try to induce you with all these 401ks in the US or in the UK, it's the private pensions. They give you a kicker, but once you get out, when you get older, they tax you on it, or yeah, they have an agenda to keep you in the game. Spot silver is up 11 cents or 0.5% at 26.30. Range has been 26.37 to 26.17. The Dow futures down 40 points. The nasdaq is down 6, and the S&P is down 5. Stock market not doing much right now. It could, of course, move a lot higher when the U.S. comes in. I think that's what it did yesterday. The futures were down quite a bit, and then the market opened, and all of a sudden, things picked up. Currency-wise, things are pretty quiet as well. I would say sterling, the euro, the dollar yen are all pretty much unchanged, so I don't have to go through it. One thing that I notice here is that the dollar's down a little bit versus the yuan is down 0.1% at 646.89. Let's look at the Aussie dollar. Aussie dollar is up slightly here, trending towards 75. And the dollar is unchanged versus the Canadian dollar at 124.60. WTI crude is up 0.5%. Just below 74, we're at 73.89. High-grade copper is up 0.5% as well. It's at 433.30. And the 10-year yield is at 1.36%. That's unchanged. Yes, today we've got the CPI data. That's out at 8:30 Eastern Time. It's expected to come out at 0.5 month on month. In June. It's a June number that's coming out. The year-on-year number is expected to be 4.9%. The previous numbers were 0.6 and 5%. That was for May. It will be interesting to keep an eye on the revisions as well. So yeah, there have been rumors that we could come out in double digits for this number. I'm not too sure or convinced about that. Apparently it was some whistleblower from the BLS that sent Cliff High an email, but we'll find out very soon anyway. If you enjoyed this video, please make sure you hit the like button. If you haven't subscribed to the channel, maybe think about subscribing to the channel. Share this video far and wide as well. It helps to spread the message of sound money, contrarian economics. What's contrarian economics? Well, it's the economics of, I would say, sovereignty of the individual. It's the economics where government is smaller and, of sanity, I would say. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.